All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for June 24th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 435. My name is David Cosmeter. I'm the creator of TimingResearch.com, and you should be seeing my screen and my charts right now. But today I have arranged for Norman Hallett of The Disciplined Trader to join us, as well as Anka Metcalf of TradeOutLoud.com. And Jim, the option professor of OptionProfessor.com, is moderating again. So I'm going to go ahead and turn it over to him.
Great. Okay, thanks, David, and welcome everybody to today's show. We've got two great guests, and before we get started, I'm going to let them introduce themselves. So let's start out with Anka.
Yeah.
Can you give a little background on yourself, and again, how you help people every day with your trading situation?
Hi, Jim. Thank you.
Hi.
All right. So, I'm a professional independent trader. I have been trading for over 30 years. However, I have switched to, and I have added, I didn't switch completely, but I have added day trading within the last 20 plus years of my trading. And that is the time when I literally ditched my job and started my income style trading and started producing money from my day trading. I come with 10 plus years in investment banking. I'm the CEO and founder of TradeOutLoud.com, which is a trading education company that is focused on educating individuals how to day trade, swing trade, and invest in any markets, whether it is trading stocks or futures or Forex or cryptos, anything. If it has a pulse and it has a candle, you can trade it. And I run two programs. We do run the Stock Swing Trader program, which is the oldest one, and it was created at the inception of Trade Out Loud in 2010. I also run a futures trading room since 2017. We also offer education, like I said, for trading, for swing trading, for day trading, for investing as well. I specialize in high velocity trading, which means that I focus at inflection points into the market that generate above average gains. And I'm also the designer of an institutional proprietary trading system that is based on the 8 layers of price support resistance that are correlated with the timing in the market and with specific zones, synchronicity, and divergency.
Great. And Anka, there are so many ways that are being presented to investors on how to use indicators for short-term trading, day trading, and things like that. So later in the broadcast, you're going to be able to give some explanation on how your procedures differentiate a little bit.
Oh, absolutely. I have a
Yeah.
really simplistic approach that anybody can apply it.
That's great because, like I say, they have so many different ways to try to
There's
figure
so
this thing
many
out.
ways to trade. Correct.
Yeah.
Yes.
And you get a headache actually looking at them all. So it'd be nice
Oh,
to
I know. And it's
crystallize it into something.
intimidating. Yeah,
Yeah.
and it's intimidating for a
Yeah.
beginner. Yeah.
Exactly. Okay, Norm, back to you. A little background on yourself and exactly how you're helping people not only with their trading systems, but also qualifying for their prop accounts that they're trying to get. Can you give a little background on yourself and that?
I appreciate that. I'm so honored to be here with Anka. Very seldom get to be in the same stage, virtual stage, and I really appreciate that. And Anka brought up something right at the end there that, for traders, there are a lot of different ways to get to success with trading, and I think it's your job if you're out there and looking, it's your job to really inspect the approaches and the demeanors of your of a guru or whatever, if we want to put ourselves in some crazy category, and what feel good. Take a look at their guarantees, make sure that you're comfortable, but you've got to take a step because I'm in general, coaching. If you can get a coaching element. Anka's got her room that you can enter. We've got some private coaching. Sure, Anka has private coaching too. But that is when you can get a mentor. I think all the traders who fast track their success look for somebody to follow or to guide them along. In the beginning of my in the 80s, I started out in the option business. In fact, I wound up running one of the largest option firms in the country. Until I was hired by Payne Weber to be a commodity trading advisor for them. when I realized that it was half selling and half trading at the big firms. Like I last about 2 years with them, did I think a respectable job. I think they would tell you as far as managing money. But I decided to do my own thing. And since 2000, the year 2000, started the Disciplined Trader, where my perception is that most traders have a pretty good idea of how to trade, at least the ones that are taking it seriously, but they can't seem to stick to their trading plan. So the Disciplined Trader has always been anchored in the mental and emotional part of trading. I really believe it's the missing piece. But lately, I also have written several books on building and running trading plans. I put those two things together, really, trading plan and simple trading plan and the mental part, and wind up with something called the Loaded Gun Simple Trading Plan, which applies to my new love, and that is prop trading. Prop trading, where you're trading their money and getting 90% of the profit. I'm thrilled with it. I'm thrilled with the success I'm having and others are having that I've guided. So that's my current love, and I just love being here too.
Absolutely. Okay, so now we've had a big opening here today where we see a big rotation coming out of tech and rolling into the Dow stocks and also the Russell. So where we are today, where do we think we're going to end up by the end of the week? Let's take a shot at that. Anka, how do you feel about, we're right now at around, what, 54.70 on the SPX? Where do you think we go by Friday,
And-
up or down?
And you all can share your charts whenever you want to. Just let me know.
Yeah.
Oh, okay. I'm good with this chart for now. So what I'm seeing right now is that even though we're seeing a little bit of rotation, I think it's part of the calibration that we're having from the option expiration. And without giving any kind, and without actually getting into any kind of details right now, I think that we're going to close pretty much within kind of like the same range that we're trading right now, within that we have been trading within the last week. So if anything, I think that perhaps we're going to head on a little bit higher. And the reason for that is because we're heading into a patriotic holiday. So historical price pattern shows that typically we're a little bit more bullish as we're going into this holiday. So I would say, for example, because we're trading right now at 25, what is it? Oh, yeah. Do you have the SPX? Okay. All right. Yeah. So what I'm seeing here is that, yeah, I got it. Yeah, I was a little bit confused because it
It
was
is a
saying
little
like
bit
20.
confusing.
Yeah. Okay. So
Well, they
I
have
had
these
to look at my
percentages. They have
chart.
these percentages. Yeah, they have the percentages on the right rather than the
Oh,
prices. So
right.
Yeah.
Got it.
Forgot to
And
change
I
that
was
back.
a little bit
There you
confused.
go.
I was looking at like.
yeah. Okay,
All
so
right.
now you got the prices. Looks like 5,500 on the S&P. Looks like the high point, and maybe
I
the
was
low
thinking
point around.
exactly. So I'm thinking around 5,500 and above.
Yeah. And you also got the Q2 end of the quarter. Sometimes that could have an effect on things too, right?
Absolutely, because we can potentially get window dressing. This is the perfect time. So after the calibration for today, depending on how we close, we're gonna definitely have to look at some stocks that have been outperforming within these past 3 months, and we could potentially see some window dressing into this week as well, starting as soon as tomorrow. So Tuesday, Wednesday, Thursday. I think it's going to be a quite powerful week overall.
And all of the big movers, NVIDIA, Dell, ARM, Qualcomm, Broadcom, Micron, they've all given up quite a bit of ground. So it'd be interesting to get your take on, where on the pullback might somebody take a shot at it,
Absolutely.
Yeah, because those have been the big movers. That's where the money's been made.
Yeah.
Okay.
Yeah.
Norm, how are you seeing it from here to the end of the week, which is
What's
4 days away?
window dressing?
That's like a salad dressing for Windows. You can
Well,
either get
Or
Thousand Island or
salad.
you get Caesar or Thousand Island. The only two
not asking
kinds
you.
they
I'm
serve.
asking Anko. So
All
And
right,
look
Anka,
at
what's window dressing? Yes, what's window dressing?
Okay, so window dressing is a phenomenon that institutional traders use in order to ramp up and revamp their portfolios, the ones that they're showing to their clients. So it's totally normal to have this effect going on, and it's totally normal what they're doing. So, for example, Norman, if you had your money with Goldman Sachs, and if you have been in a stock like, I don't know, something that has been down, I don't know, something that is down right now. I can't even think of a stock that has been down, but has been down within the past 3 months. There's not going to be any kind of buying that occurs. So traders beware, especially traders that like to buy bottoms. This is not the time to do it. You have to wait till the beginning of the new quarter, because at the end of the month, those stocks that have been performing really weak are just going to get ditched, and portfolio managers are jumping, and this is the word, jumping into high flying stocks. So for example, if let's say you have a fund that has you invested in a stock like, I don't know, something that has been down, that portfolio is going to sell that stock, for example, this week, and it's going to jump in something that is extremely bullish, like Apple, for example. And you would never know that, let's say your portfolio has suffered a loss, because you would see that you're in Apple and you would go like, oh yeah, cool. So I have been in Apple for the last 3 months. So yeah, it's perfectly legal for them to do that. It's called dressing up their portfolio, meaning they're lying to you.
I see. What was my original question, Mike? No, just that was very good.
Yeah.
Very good. I think I got that. Can we put the S&P chart back up, or the SPX? You know, I'm looking at this in a very simple way. And you know, first of all, I'm noticing, is that the RSI on the bottom? Yeah, I mean, we are in what seems to be overbought territory. Now, I don't like to get trapped there, because so much of the time, if you can see right before the recent peak, there was another RSI peak that, you know, others may talk about getting overbought, and yet the market moves higher. It just means a strong market. And so we do have, I mean, look at this chart. I mean, this is about as strong an uptrend as you ever want to see. You know, the first thing I do before I start trading is I look at the economic reports that are coming out, the calendar. And there's absolutely nothing the first 3 days, unless I missed something of the week. The last couple of days, with the jobs report and so on, there's going to be some action. I really I like Anka's thoughts about heading into the holiday. I think people do get positive about it, but I really don't see much going on this week. I would be surprised if we're much higher or much lower. I think we're going to be relatively range bound in the range that we've already established over the last 4 trading days there, if I'm looking and counting today. You know, I just see a little bit of sideways action, at least till Thursday or Friday, of which the reports will, you know, give us some sort of direction. But I'm not looking at much to happen this week. So I'm going to wait for the market to tell me. So that's my 2 cents.
Yeah, the PCE report on Friday is going to be the big one. So maybe people sit on their hands as they await that. And then after they get that, maybe then the going into the holiday next Thursday will hit more on Monday, Tuesday, Wednesday of next week.
Yeah, and I think I can give a tip to trade, and maybe Anka could second that emotion, second this motion here, that when you have days like this, the next couple of days today, range trading can be what dominates, as opposed to looking for breakouts and moves. So I always take supports and resistance, even though I always take them seriously. I take them even more seriously on a few days like today, where you're not going to have any important reports coming out. The supports and resistances seem to hold very well on days like today. So just a little bit of a tip.
Yeah, as far as breakouts are concerned, you don't have to look very further than the oil stocks, which I've been kind of keen on, and I'm getting paid very nicely on today, the Occidentals and stuff like that.
Right,
But
on the separate
yeah,
stuff here, for sure.
yeah, that has legs today, that's for sure. Anka, you are now going to have the floor, and we are going to get a little peek into how you operate with regards to the day trading and what makes you move.
Oh, that is a great question because in
What
fact,
moves you, Anka? That's what we're going to find out. What moves
what's
Anka?
shaken?
Yeah, that's right.
All right. So first of all, because I am a futures trader and I have not always been a futures trader, so a lot of the methodology comes from my day trading days, and I was very fortunate to have some really great mentorship into my the beginning of my trading career that set me up, with really great concepts. First thing that I've learned about is risk management. I'm one of those traders that never blew up an account, but actually started growing it after 3 months into my day trading career. So I pride myself with that because it has helped me through the years, not only to develop, consistency and find consistency myself and improve myself as a trader, but I'm really happy to share my methodology with, a lot of my traders. One of the major things that I look at is the relative strength and weakness into the indices because I am a newer trading session trader. I just traded power hours, so I trade the first hour of the day. So basically, I still, watch the market until the potential close of London, but I don't take trades beyond that because volume goes down. It's a little bit more flakier. You got to apply larger time frames in order to stay above and afloat with the stops and all that. But bottom line is that I have a really solid selection criteria that is based, like I said, on the relative strength and weakness. It is something, like I said, comes from my day trading career, from my stock day trading career, because when you place a stock trade, for example, a day trade, you could very well, I have the same system for swing trading, but we're talking about day trading right now. The first thing that you analyze before the market opens are the Qs, the SPYs, diamonds, and Russell. So you basically analyze the price under the hood because you want to know what the pulse is. Is the general idea weak? Is the general idea strong? Is there one index that is stronger than the other? And in many cases, that is going to be the starting point because, for example, if you have strength, for example, in the Dow, like we had today, and if you have setups that are forming on daily charts that are stronger and that are triggering, then that particular index is going to have, it's going to be much more powerful and it's going to rocket ship. Same concept I apply for my trading today when I had, for example, the Dow long. So in my morning analysis, there were some key things that I analyzed. First of all, it was the level of strength and the level of weakness. And there is not one indicator that is going to show you, how to trade this methodology. You just have to look at multi-time frame charts. You have to look at the chart structure. You have to look at, you have to definitely look at, for example, daily charts, whether they're in an uptrend, downtrend, sideways, if they're approaching rotational points, if they're approaching breakout points, if they're approaching trigger points, and where they're situated. And the Dow this morning was one of the strongest. So my attention went immediately to the Dow today, and seeing that pre-market, the Dow stocks were structured a little better than NASDAQ stocks, then that was a contributing factor as well. I also look for synchronicity and divergency, and it's so much easier to trade in a synchronized market than a divergent market. And right off the bat, I've noticed that the Dow, even though it had the relative strength, I didn't get in it right away. So I waited for the setup. But I also waited for some kind of proof in the rest of the indices because I always compared the indices. So number one, I wanted to see if NASDAQ, which was the weaker from the bunch, was able to rotate, was able to sustain the current support level because it was a little bit flakier, and it didn't. So it just did a lot of back and forth action. So it wasn't as strong as the Dow. So I had a little bit concern taking the trade in the Dow, and I waited for about, I would say, 5 to 7 minutes before I got into the trade, and that is right from the open because my strategy kick in right away. So I had to wait a little bit because I noticed that there has been movement and action in the Dow. At the same time, Russell was trying to punch a little bit higher and was holding much better. And then we have on the other side, we had NASDAQ and S&P that were weaker. So obviously in an ongoing strong market with relative strength coming, extreme relative strength coming from the Dow, I literally waited for the setup and I went into the Dow long. And ultimately, when I get into my entry was 700, and I had a target into 800, and I had another target into 40,000. Usually, I do have other targets along the way, but the Dow offered the tradable void. So the tradable void is the area, the space where you don't have any other interruptions in price, and you don't have any other resistance areas that are going to halt the price and perhaps to generate some pullbacks, get the price rejected for excuse me, for example, for these pullbacks. So I got it into 40,000. In fact, it went to 39,999, which is pretty accurate, right, by the point. And we had a beautiful 3-hour trade in it. And I was able to do that by identifying the tradable void, identify the strength, identify the divergency, and went with the strength, and went when the exact moment when I saw a rotation of the momentum with the timing into the market, because I have certain timings into the market, like when algos hit. I'm not going to say any more about it in here, but you're going to see that there are some timings into the market when the price just skyrockets and just starts going. And I trade with these times. So one of the other factor is multi-time frame analysis. That helps a lot, because multi-time frame analysis is going to show you if everything is in sync. I never go in a trade long if I have contradicting time frames with contradicting triggers. So if everything is in sync, I go with. So the number one thing, I look for trends. I use the 10 exponential moving average, which is the power trending moving average that I use. As long as the price is trading above the 10 EMA, I try to stay in as much as I can, and I'm very careful at the next sign of rotation. Then, by the way, there's still room for the Dow to go into the 200, maybe later on this week. But this is my selection criteria. So basically, in a nutshell, is the relative the strength and the relative weakness that comes from the indices and the underlying stocks. Because I do analyze all the stocks that are on a swing level, because these are this is where the institutions have their positions. And if I see strong triggers into, for example, Dow stocks, then I'm going to focus more on Dow day trade, because those triggers, those institutions are going to trigger those stocks, and they're going to carry the price definitely higher into the index for a day trade, for a momentum trade in the morning. So it's a little bit, so it's not hard. It's an institutional methodology. I have not invented it myself, I have to say that. So this is what I was taught, and this is much of the a lot of what I said in here is being used and computed into algorithmic trading.
Right. How about on sizing? Like say for every 10 grand or whatever that you're trading, how many contracts do you generally feel is appropriate for day trading as far as sizing?
That is a great question, because there is a lot of confusion in this space, especially in the future space. And the only way where you can trade this is via position sizing. There is no other way. I know that there are some misconceptions out there that if you have, let's say, a $50,000 account, you can trade 3 standard contracts, or you can take a trade with 2 standard contracts, or I just trade with 1 standard contract. That is completely wrong, baloney. That is the only way where you can blow up accounts. The only way to trade is through position sizing. So for example, depending on your risk tolerance and your ability, you decide the percentage. However, there is a calculation here that shows you exactly how much size. We provide calculators to all our traders. And in fact, depending on the size, the account size, they could actually have a cheat sheet on their desk. It's literally like the size of a picture that you can have on your desk. So you don't have to calculate anything while you're trading. You just look at the cheat sheet and you determine your size. There's not a standard size in futures. So everybody that is just teaching and this is for all the traders out there that are trading standard size, whether in stock trading or in futures trading. If you want to succeed, you have to apply position sizing. Position sizing is looking at your account size, determining based on your risk tolerance and your level of expertise, what kind of trader you are. You can risk half a percent. For example, if you're a beginner trader, or 1%, or go as far as, I would say 1.5%, or 2% if you're an extraordinary trader. So because I run a trading room, I don't risk more than 1%. And the number of contracts is going to vary every single time. There are times where, for example, I get in with 0.5%, and sometimes when I get in with 1%. During option expiration weeks, I always use half of my size, half of my position size. And on regular, for example, like today, I use full size. So my size per trade is $5,000. So I went into the Dow trade because I had a 100-point stop. We generated 3 R's in the trade, so 3 times of what I risked. Then I went in with 10 contracts. But the number of contracts varies depending on the entry and the stop. So for example, if you have a stop that is, I don't know, maybe you guys want to give me an example. I don't know. Let's say you're trading NASDAQ, okay? And in NASDAQ, you have a stop of, let's say 25 points. And
now, are you talking about NQ here or QQQ? You're looking at NQ, aren't you?
NQ. We're talking futures. Yeah.
So let's put up NQ just to get an idea of what the,
Yeah.
There we go.
Yeah. Okay. So for example, let's say you have a setup here. I don't know. There is no setup actually here, but let's just say like there's a setup here. And let's say that your stop is 920 and that is still percentage, or I don't know what it is. Okay.
Oh, now
All
you're
right,
back. Yeah.
Okay, I got it. All right. So let's say you have a 25-point stop, just saying hypothetically. And if you have a risk of $5,000, then you could take the trade with 10 contracts. However, if you have a 10-point stop, and the stop varies depending on the strategy that you're using and the way you're using your setup locations. So for example, let's say you have a tighter stop of 10 points, then you can take the trade with 25 contracts.
I gotcha. So the difference between your entry and your exit, the difference between your entry and your exit points is a number. And then you take the amount you're willing to risk on any one trade. Exactly. And you basically divide the amount you're risking between there and the stop. And that'll give you an idea of how many contracts.
Correct. Because if you're and here's the thing, and all the algorithms that are, and I mean all of the algorithms that are on Wall Street, this is the way they trade. So they don't trade standard contracts because the risk is always going to be different for them as well. And you're not going to have 2 trades that are going to have the same parameters. They're always going to be they're always going to be different. For example, one time S&P is going to have a 5-point stop. Sometimes it's going to have a 50-point stop, depending on whether it's swing long or swing short or day trade or whatever. And so there is no other alternative in getting the sizing in. And institutions trade the same way. This is why you have the R, meaning the risk to reward ratio. Ray Dalio talks about it as well. Tony Robbins talks about it. Van Tharp talks about it. So if you look at institutional traders and you read even Warren Buffett and everything like that, they all trade the same system. So if you're coming from the institutional background, this is the only way that you can trade. And this is the only way you can make money, because you're not going to blow up your account. I'm going to give you just a quick example.
And you
Let's
also
say
don't want to have too few contracts on when you could get
exactly, you
more
want to
aggressive.
keep everything the same. You want to
Right.
keep everything the same. This is consistency, and people understand consistency as to making money, but you need to be consistent when you're losing money. This is the biggest secret. Because, for example, if I have a losing trade right now, let's say I'm losing $5,000, right? If I have a second losing trade, I'm risking again $5,000 because that is my R, that is my risk, and I lose my $5,000. Let's say I have a third trade and I lose $5,000, but I'm not losing $1,000 or $10,000 or $7,000. So I keep my losers the exact same. And then when I have a trade, because my risk to reward ratio, and when I look at a trade, I look to gain more than 2 to 3 Rs, it's very easy for me to make up for the losses, because in one trade, I can recuperate 3 of the losses that I've made. And even when you look through my performance portfolio, which I give access to my traders, to my real account, and see my tracking my performance and my R's every single day and every single week and every single month, they see that I have more winners than losers, and they can easily see that if I have 3 losing trades, there's going to be 1 trade that erases 3 losers.
I got you.
Yeah.
So that's very interesting. And of course, you get into it and deeper when people get a hold of you after the show here. Obviously, you'll explain how do people get a hold of you.
Oh, of course.
And you get into it much deeper.
Sure.
Okay, Norm, over to you. Any particular strategies you're looking at, and
how much deeper can you go? I mean, it was
yeah.
it was pretty deep.
Well, no, that's her methodology, and that's
I love
her
it.
belief system. Yeah.
I love it. I love to hear. It's all I was surrounded with the early part of my career. It's really nice to hear that. I almost, first of all, I want to comment on the position sizing, because I think that, again, I take it from the mental and emotional part.
Exactly. It makes it, you can be brain dead and you can trade if you have the risk unit. It's the most important thing, because you're gonna then allocate, and it makes it super easy for you. Because what I didn't mention is that you have to allocate how many trades you're gonna take per day, and you're gonna budget for every week, just like you budget for your groceries, just like you budget for your investing, for your compounding in your accounts.
Remind me not to go shopping with you. But
I know, right?
Yeah,
you don't.
But now listen, I'm going to show you a silver chart in a second. But I wanted to just comment on this position sizing thing, because when I approach a trade a day, I give myself a range of the number of contracts I'm willing to take. Incidentally, Anka, with the advent of micro contracts, there's no excuse for anybody to go too big.
Anybody could go, and here's Norman where I have to disagree. You could go with any size, you could go full size. So for example, if you have, let's say you're trading a small account, and let's say you have, let's take a very small account. Let's say I don't know, what is the small account? Like $50,000. Okay?
Well, that's not the small account that I run across now and then. I mean, I'm talking about $10,000.
Okay, all right. So we could take $10,000, and that would mean that you're going to take $100 risk per trade. Okay, so with a $10,000 risk per trade, you're going to go through your calculator. I can show the calculator later on, but I don't know if I can't do it because I'm on another computer. For example, you're going to go through the sheet and say, hey, if I could take it with 1 contract, depending on the size of the trade, if I could take it with 1 contract and alleviate the micros, right? Why wouldn't you take it with a full size contract? Because so let's say you have a trade where you could take it with 2 contracts. Okay. So why would I take it with 20 micros where I can take it with 2 contracts?
Well, there's no reason you wouldn't do that. But I mean, if somebody had and I have an argument as far as whether people should have a floor. If they're having a bad day, you should be leaving. But at some point, maybe they're down $400 and $500 is their limit for the day.
Well,
I
then
think
they should take, sorry to interrupt you, Norman, but if they have a budget of $500, they should divide the $500 into 4 trades. And they should not be taking like all the trades in one day. They should be waiting for the right setup in order to engage into the trade. For example, I allow myself every single day 5 trades. Do you think that today I'm going to go in the market and take 4 extra trades because I have 4 extra bullets plus the 3 hours that I made?
no, that's what I'm saying. Look,
Yeah.
there are so many different ways of doing it, and I understand and I believe that you certainly are on a solid track. I trade a little bit differently, and although a lot of the same things. In other words, I pay attention to support and resistance. I pay attention to the right kind of trigger. I pay attention to I just pay attention to a lot of the things. One of the things I want to mention is what I call undertow. You talked about looking at different time frames. The first thing I do in the morning is I look at the daily charts, and I want to see what the action is. Now, if I get even though I'm day trading, when I get a trigger in a daily chart, that in one direction, I know that may very well supply an undertow to all of the lesser charts. Okay, the 5 minutes. So I will favor, from a position sizing standpoint, the triggers that are in the same direction as was just triggered in the daily chart. So I let the longer term charts, I let the daily chart dictate to some degree, to a degree, the position sizing that I'm taking in the lesser. I'll favor that. Doesn't mean I won't take a short trigger if it's a nice trigger in the opposite side that the daily is telling me, but I will take more of a minimum position. So
I would never do that.
I understand. I understand that you would never do that.
That's what makes the world go around, because obviously we're looking at 2 different disciplines, right?
Two different disciplines. And I will say that when I was managing money, when I had my own fund, you have to get Arthur Bell did my accounting for me. I guess you know Arthur Bell, right?
No, never heard of him.
Well, he was one of the bigger. Now this has been 15 years ago, 20 years ago. So, but in any way, he was an accountant, and my sister-in-law actually managed a certain area that kept my records for my production. So what she told me one time was very interesting to me. She says the top 10 funds this year, you're lucky if you see 1 or 2 or 3 of them next year. So, listen, things change. I believe that a trader has to take a look at a process and see if listen, my accountant is a guy that needs all kinds he has to see a trade jump all kinds of hoops in order to get in. I'm a trader that likes the action. If I deny myself the action, then that's where I start to screw up on the mental and emotional. You can be an active trader and be a very responsible trader. You can be a conservative trader like my accountant and be a very responsible trader. You have to find a trading plan that fits you. And so,
I have to disagree here, because you have to in order for you to be like stress-free, you have to know exactly how much account you need to risk based on your risk tolerance, and you need to have a size, and you need to have a plan, just like the algorithmic system does, because the algos are not going to stay here and say, okay, we're trading at the high of the day, I think I'm going to take lesser of a size. They don't think, they just act. So the more you do it mechanically, the better it is for your performance. And I do have examples from my traders when they don't respect the size, and for example, that could be devastating because they blow up their accounts, and they get back to me and they said, I wish I would have taken only your trade, but I traded in the afternoon and I did this and that and whatever, and they blew up their accounts. So
I guess you're making my point there. You make my point from the standpoint that, listen, I can be a successful trader as I am with my system, you and your system, but I'm sure there are people that have paid you money and have visited your trading room and so on, and I'm not making any money. They exist, and the reason they exist is not because you're giving them bad information. It's because of the fact that they don't have the mental wherewithal to follow it. And I'm just saying that you need that fit. You need that fit. There isn't not just one way of doing it.
I agree that for charting, and I agree for setups. For example, I'm a trader that never buys support and never shorts resistance, and I wait for confirmation. So I agree in charting, But as far as position sizing, I mean, there's a lot of literature out there that is free. And every successful hedge fund that is out there, that's why they're still in business, because they respect position sizing, which is the holy grail of trading. If there's a holy grail of trading, position sizing is it. And you judging, oh, it's, kind of like here, maybe I'm going to do more size. You're already doubting yourself. And that, in my opinion, if you're doubting yourself, you should just sit on your hands until you're perfectly confident to take the size. Because
I'm
if
not
you
sure.
don't
I'm not
yeah.
doubt. I'm not sure about the doubt. I understand what you're saying. Listen, I appreciate what you're saying. But there's a checklist that I like to use, that if a certain amount of confidence, that based on back testing and based on what I've in my experience over the years, I'm going to take a stronger position. I mean, I just don't see what would be wrong with that. But whatever. I do think that position. Why do you think, Anka, that position sizing is very under talked about?
Because there are a lot of educators out there that only focus on charts, and they're one of influencers. They're, the ex traders that have, a lot of following, and they love to, share, all the mumbo jumbo that is out there, but they don't have the proper training. And position sizing is just because they don't have the proper training. This is number one thing that I have learned when I joined the firm, and I worked for a hedge fund as well, and they used position sizing. So that's, that is absolutely the number one thing that you need to learn when you're getting into trading.
I agree, absolutely, 100%.
Yeah, the one
so
thing
glad you
that
mentioned it, because
consistency comes from the ability, from your ability to recuperate the losses. But if you have like losses that are all over the place, sometimes let's say you have a $3,000 loss. So let's, because you talked about a small account, let's say you have a $100 loss, then you have a $500 loss, then you have a $300 loss. So all of a sudden, when you're using just, let's say, and then you go like, oh yeah, maybe I'm going to position size now it's too late, because it's going to be really hard to get out of that hole.
No, I mean, people's idea of position sizing is, I'm down, I better increase my position to get it back. I mean, that's not position sizing. That's crazy.
That is a recipe for disaster. And
absolutely.
Yeah,
I mean,
and I had an example when I had an open house, and there are traders out there that have no idea what they're doing. They want the best strategy, they want this, they want that, but they are not paying attention to sizing. So there was this one trader, and I gave a trade. I remember it was last year in August, and when we do our open house, and she actually got into a trade in the Dow. And she said like, oh, wow, thank you so much. It was so amazing. I made, I don't know how much money she made, yada, yada, yada. And then ultimately in the trading room, she said, thank God this trade worked, because if this trade failed, it would have blown up my account. And I'm like, well, how much risk did you take? And she said, well, I have a $2,700 account, and I took it with one contract.
Yeah, well.
Yeah.
I think the
difference between you two guys is basically that Anka's working with a system of, you have X amount of dollars to risk, and then that's how many contracts you can do based on where you're going to be getting out. And then Norm, you're saying that people will do homework, and then there'll be instances where it'll be their judgment that a more aggressive position would make more sense for whatever reasons. And so basically one's more like subjectivity and one's objectivity type thing. And I think,
I think
they both have merit. They both have merit, but obviously you guys are not going to hold hands and walk down the aisle, because you do have different opinions.
Although I don't know. I think we need to have dinner first, but yeah, I just I just think there's a number of different ways to cut it, but
and you're both strong-willed individuals, so you'll both believe what you believe.
Well, but that's the great part about trading. People are going to listen to this and say, hey, this statistical woman who's just all about structure, which I am, but in a little bit different way, because really trading is all about the chart. It's about price. Where is its price action? And in any event, I do appreciate your view of things.
And also, I think Anka's doing a little bit of shorter term trading than you aren't, isn't she, Norm? Aren't you doing a little bit more?
Yeah,
No,
time
I
on your...
apply. Yeah, no, Jim, I applied the same thing for my swing trading as well. I
I
apply.
got you.
Yeah, I apply. But in day trading, here's the difference. In day trading, I apply 1%. And that's the reason why my size is 5,000. I trade a $500,000 account, and it's not prop, it's my money. And what I do is I apply 1% because I need to talk to the room. They see my trades and et cetera, et
right,
cetera.
right, right. It's hard to do two
Yeah.
things at once.
And
Right?
at the end of the month, I take my profits out and I still leave. So I don't need to grow my account anymore. However, in my swing trading, I apply 3% risk.
Well,
So
I will say, Anka, that in prop trading, for instance, if with one of the popular firms, it's a $50,000 funded account you're going for, and there's a $2,500 red line. You start with 50,000, but you can't breach the 47.5. I always have them take that distance and divide it by 6 or 7 or whatever it is per trade.
Right.
So I'm with you on that, because I
Right.
think if you really saw we're talking about specific points here, but I think that I'm much more in agreement with you than I am at odds. It's just some of the fringe areas, which really makes the personality of a trader.
Yeah, so here's the thing. Before I became an independent trader in my early years on Wall Street, I was a proprietary trader for a really big firm. And I used to trade, but it's not the prop trade, like you would get to trade from home. I was literally working for this company, and it was salary based, it was incentive based. So I was working for this hedge fund. And one of the other things that I was told is that if I go over my risk limit, I will get a penalty. And after 3 penalties, you would be out of a job. So I come from institutional prop trading where we would enforce what they would enforce. So when I got hired, so I was presented this binder and what you need to do and what you're not allowed to do. So that's the reason why I'm sharing the position sizing and the calculator.
Oh, no question about it. In fact, all of this, the prop trading firms that they exist right now for retail traders, the thing is, you don't get fired. You just have to pay them more fees and the evaluation again. That's what 90% of the people are just paying them fees. So this is where they make their money. But when I was a CTA, I mean, I made 20% of what I earned. Or the profit. I mean, not 90%, where these people are paying.
Right, right.
So the whole game has changed.
Yeah, we would get bonuses, and we would get, of course, bonuses, and that would be a percentage of the gains, and and some other incentives that we had. But it was a very hard game, so you had to play by their rules. And I have to say that most of the things that I have learned then by trading somebody else's money, because for me, I was actually more freaked out of trading their money than my money. So so actually once you make it like automatic, like once you step away from like, what should I do now? It's on support and it's doing this, or it's on resistance, like all this. So it has to be. So what they taught us is that when you look at a chart, if it doesn't speak to you right away, ditch it, jump onto the new. We were trading stocks, so not futures. But I applied that methodology and I was like supervised to do that.
Yeah, I mean, it takes years and years to get there.
Oh yeah, it takes.
For the retail trader that comes to me, they're not looking a 5-year window to be, they're hoping we're giving them the information so that they can compress that time. But you're talking to be as solid as you're talking about with no emotion at all.
Yeah, it'll probably take about at the most 3 months, I would say, at the most. If you have the proper trading education, it's actually a no-brainer. And
that's it. It's the if part, that It's the if part
Well, it would take a lot
you know.
It
less
depends
time
on
if
everybody's
you're
ability.
automated, Anka. You're saying that it'd be a lot less time because if it's automated, you don't have to.
It's automated. It's you can, yeah, it's automated. Be brain dead and you can trade. I could give my trading system to my neighbor, and he's an engineer at GM, and he could trade now. If I give him the system, which is super simple, and give him the pattern, give him my trading plan, which is literally like half a sheet in the paper, like 3 paragraphs, he could trade it because it's automated.
And the handful of people that you give your trading plan to that don't make it, it's because of the mental part of the game. Not
I have never had a trader that didn't make it. That's the thing. I haven't. So we have over close to 400 people in our trading room. And most of these people have been have had our education, and they're thriving.
Every one of them. Interesting.
Yeah.
I'm going to. Can I show my silver chart real fast? I don't want to leave without.
Yeah, there's a good relationship between gold and silver now that really favors the silver.
Yeah, you should be able to share now.
Yeah, I'm sharing right now. I just want to show you some simple lines that I've drawn in. You know, when I see this kind of, you know, of course, we can talk about, and probably at our dinner, Anka, we'll talk about the M1.
We have to have dinner, Norman, when I'm back in Florida.
Oh, okay. Well, coffee then.
Yes.
The idea is that, you know, there are silver and gold, of course, have that ratio. When I started out, it was 50 to 1. I think it's more reasonable to be about 60 or 65 to 1 in these days. But you know, the idea of inflation and is really comes from the measure of M1, the way I was taught, and the fact that you know, that we during the pandemic, all this money was being given and they were sending checks to everybody, and the M1 was really building. Well, we're seeing the result of that money supply moving through the economy with all of this inflation. I mean, that's really the basic part of it. And but the metals tend to really take off during this period of time where there's a push and pull. And you're seeing it right here in the silver chart. I've drawn just there's a daily chart. I've just drawn the lines. These are some of the signals that I've been taking. But when you see a megaphone like this, to me, and you see a consistent movement like this, you can expect or you can anticipate. Again, there's a difference between anticipating and doing something about it. You can anticipate, and when it happens, you're ready to move with conviction. And you know, right here, I'm looking for a signal to go long here. In the shorter, in other words, to favor the longer the long trades in the shorter time frames. But I just wanted to show that, you know, this kind, and look here, you've got the RSI. When we've hit this level in the RSI, this is where we took off. We hit it again here, took off again here, and we're bantering around this. I don't like the stretching here, but again, I would like to see, again, you need to have a system that would trigger you on the long side on the shorter term chart, but I would like to see, and I've been talking about this for how long, Mike? For probably the last year, about the potential of silver at some point. I think that point is already here. So I think that you know, traders who have turned away from the metals because the S&P and the NASDAQ and the Russell has been so popular, I think maybe you should turn a little bit of attention towards what's going on in the metals if you're a commodity trader. And if you're not, there's plenty of ETFs in the silver market too. But anyway, just wanted to make sure you saw what I saw as far as the potential.
The metals have quieted down, and of course, quieted down could be just what they call a pullback, and then they can get right back on the horse. So if you're going to
look at these day ranges, look at these ranges.
Pullback is always a better time than you know, after it's already run up through the roof. You know?
Look at the increase in the daily ranges here. I mean,
I agree with Norman. This is a beautiful chart, and it's sitting on minor support. You have the prior resistance that you marked it with the red arrow, right to the left, right there. You have that perfectly set up with the current momentum, with the current price action in the market. I love it.
All right, then I'm paying for the coffee. All right.
All right. Well, this mudslinging has got to end now because we're at the top of the hour. But, so anyway,
gotta do it again.
Yeah, we'll do it again. Yeah, I like this.
I'll,
Another
I'll be
we
better
need Mike
prepared.
Tyson in the ring too. Mike Tyson's back in business too, right? All right, so let's talk about getting a hold of each other. Let's start with Anka. How do you get a hold of you, and also what kind of offers you got for these people?
Okay, so you can reach us at info@tradelaw.com if you have any questions about our products or services. You can go to our website to see what we offer. We have a trading room for futures. I just trade the power hour and done. We have a stock swing trader program that we currently have it coupled with investing as well, and we're going to separate it very soon. Coming this fall, we're going to have a brand new investing course. This is going to be active investing and generational wealth investing, and how to do that, and right, easy steps in order to do that. And again, you don't have to have a lot of money in order to do that. Just wanted to highlight to everybody that if you're interested in funding, we do provide. So Trade Out Loud offers funding, and it's not subscription based. It is a one-time fee. So if you're interested, you could go to our website. It's under the services tab. So we do offer a lot of things there. Just keep in mind that the instruments that you're trading are CFDs, and therefore, if you're accustomed to using investing.com, that is the price that you're going to get with our charting and with our system. So you would have to trade those charts. But other than that, we will have this week. We don't have the link available yet, but stay tuned. We will have the mid-year review, and also we would have the Q2 forecast up and running towards the end of this week with our projected targets for everything. And we had the past recordings that we're gonna finally make public to everybody. We always do that at the beginning of January. So we do it on January. We did it this year, I think January 3rd, where we forecasted NASDAQ at 19,000. And guess what? It went there. And we're going to work on the second half of the year. A very important part because we have election and we have a lot going on. So there are a lot of unknowns, especially with that, with the FOMC and with the rate decision. That's going to be a doozy. We don't know how that's going to play out.
Right. And Norm, how to get a hold of you, and what are we going
Well,
to
you can
get
get
when
me
we
at
do?
the disciplinetrader.com. There's a contact area there that you can just write me and I'll get that directly. We're actually tomorrow I'm having a VIP meeting about our VIP coaching program. We call it laser coaching, where we offer, this is for the mental and emotional part of trading. It's for accounts of $25,000 and over. And it's a year of unlimited laser coaching sessions with us, laser coaching 15, 20 minutes at a time. We get right to work. And we actually create specific meditations. We actually create what we call tapping, not ETF, but EFT, emotional freedom technique type tapping. We do a lot of modern approaches to help you be disciplined when you trade. And for traders that are trading a reasonable amount of money, to be part of our VIP coaching, we have a presentation tomorrow. So if you're interested in that, just go to thedisciplinetrader.com and hit that contact area and write me, and I'll send you the information. But in general, recently I'm all about the prop trading. I think it's a way that a certain pie section of traders can really flip their struggle into some tremendous, in some cases, degree of success. So we can talk about that too. You can use that same contact area. So that's what I'm about. I really appreciate it being here with Anka today.
Yeah, me too,
Yeah,
Norman.
absolutely. We had a great trip. Hey, as far as Option Professor is concerned, last week with the trading indicator people up in Montreal, we put together a 6-hour master class in options. And if you go to optionprofessor.com, I can explain how you can get it. A lot of people need to know a lot more about options, and we do specialize in inexpensive options that we think will get very large. Last week we did metals and energy, and if you look at your charts today, you'll find out those options are no longer cheap. So that's what we do. And it's a very lot of fun because the options are inexpensive. And so that means your cash out of pocket is very inexpensive. And then when you catch a big ride on them, it's kind of fun. So go to optionprofessor.com and I'll explain how you can get that and a mentorship with 1 hour with me. So you come out of there pretty smart as far as options are concerned. Okay, thanks a lot, you guys. Always pleasure. We'll be getting this together again, hopefully real soon. And right now it's going back over to David.
All right, yeah, excellent discussion today. So thank you to all of you. So just want to quickly remind everyone, you can to be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can just go to TimingResearch.com to get access to any of the past shows or presentations, including this one, as soon as I can get it posted. Also, if you're on Substack, Timing Research updates are on Substack now as well. And just want to thank my guests again for today. So Norman Hallett of thedisciplinetrader.com and theirmoneyyourprofit.com, and Anka Metcalf of tradeoutloud.com, and the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you so much for having us.
Thank you.